Hello, and welcome to another episode of My Home, My Sale, Homeowner's Corner. Today we're going to be talking about essential mortgage and real estate terms. Let's get started. Navigating the world of mortgages and real estate transactions can seem like learning a new language. To help you decipher the complexities and make informed decisions, we've compiled a comprehensive list of key terms and definitions. Whether you're a first-time homebuyer, an experienced investor, or simply curious, these definitions will serve as your guide through the intricate terrain of property transactions. Let's talk about the different types of loans. There's an FHA loan. An FHA loan is a government-backed mortgage insured by the Federal Housing Administration, designated to assist first-time homebuyers and individuals with lower credit scores or seeking a lower down payment. The other type of mortgage loan is a VA loan. It's a mortgage backed by the U.S. Department of Veteran Affairs, accessible to eligible veterans, active duty service members, and select members of the Air National Guard and Reserves. A conventional loan. A conventional loan is a mortgage that's not insured by a government agency, typically requiring higher credit scores and a larger down payment compared to FHA or VA loans. An adjustable rate mortgage. This is a mortgage with an interest rate that may vary based on a specific index, like the Treasury bill. Jumbo loans. This is a loan that exceeds the conforming loan limit set by the Federal Housing Finance Agency, Fannie Mae, or Freddie Mac. Typically, these loan amounts are above $750,000. Let's talk about loan terms and concepts. A fixed rate. A fixed rate is a mortgage featuring a consistent interest rate throughout the loan's duration. We talked about this earlier, but an ARM rate, where the ARM rate is an adjustable rate mortgage where the initial interest rate for an adjustable rate is low, but it's subject to change based on market conditions. What's a HELOC? A HELOC is a home equity line of credit. This is a revolving credit line secured by home equity, allowing withdrawals as needed. It kind of works similar to a credit card, but it's secured by your home, and the interest rates are typically better. A home equity loan is a lump sum loan secured by home equity, and these typically offer a fixed rate term and a fixed repayment term. This is different than a HELOC, which is a line of credit. A home equity loan is going to be a fixed loan amount. What is an interest rate? An interest rate is basically the lender's fee for borrowing the particular loan amount. What is home equity? The home equity is the difference between your home's market value and outstanding mortgage balance. Today's audio blog is brought to you by Be Nice Media. If you need help with your real estate marketing, check out Be Nice Media. You can sell your property in 3 easy steps. Tell them about the home, add your contact info, and respond directly to buyers. Please check out the link in this post for more information. What are some definitions of transactions and the professionals involved in a real estate transaction? Closing costs. Closing costs are fees associated with finalizing a mortgage and real estate transaction. A mortgage banker. A mortgage banker is typically a financial institution originating and funding mortgages, often servicing them as well. A mortgage broker is a liaison connecting borrowers with potential lenders, helping them find optimal loan terms. A real estate agent is a licensed professional representing buyers and sellers in property transactions. A title company is a firm verifying legal property ownership and managing the closing process and help issuing title insurance. An escrow company is a neutral third party holding funds and documents during a transaction. Sometimes title company and escrow company can be interchangeable words within a real estate transaction. An appraisal. An appraisal is a professional evaluation of a property's value, often required by lenders before approving a mortgage. Let's talk about some additional financial terms. Down payment. Your down payment is the initial payment by the buyer, usually a percentage of the property's purchase price. Loan principal. The loan principal is the original loan amount borrowed for a mortgage, excluding interest. What does amortization mean? Amortization is gradually paying off a mortgage through regular payments. Mortgage insurance. Mortgage insurance protects lenders against borrower default. Even on a conventional loan, even though it's not a government insured loan, if you put less than a 20% down payment, there's always going to be a form of private mortgage insurance, and this is going to be additional to your mortgage payment. What is the homeowner's insurance? Homeowner's insurance is the coverage that protects your property against loss or damage, such as a fire. Um, so you're going to be protected through homeowners insurance. The warranty deed is a legal document conveying the property ownership rights from the seller to the buyer. The good faith estimate is an estimate of closing costs and mortgage terms provided by the lender. This is typically something you get when you first talk with your real estate lender. With your mortgage lender. The HUD-1 statement is the final document detailing all closing costs for a real estate transaction. What is a refinance? A refinance is when you replace your existing mortgage with a new one, typically to offer better terms, maybe a lower interest rate, or to consolidate a first and a second mortgage into one mortgage. A first-time home buyer is what it is, an individual purchasing their first home. Do keep in mind that some loan programs may consider a first-time home buyer somebody who hasn't owned a home in the last 3 years. So this is something to definitely look at, especially if you're looking at a no down payment or a low down payment option. A second home is what a second home is. It's a property used as a secondary residence. Typically, this is like a vacation home. It's not necessarily a property. The other type of property is a rental home. It's a second home, but it's a property that's going to be generating income for an individual. What's the loan origination fee? This is typically the fee the lender charges for processing the loan application. Underwriting fee, a fee for assessing a borrower's credit worthiness and loan risks. What are discount points? These are typically points or fees you pay up front to lower the rate. So for example, let's say interest rates are at 7%. It's possible you can pay 2 points, which would be 2% of your loan amount, to discount the rate to say 6.5%. And those are things you got to want to talk to your lender about to see if it's worthwhile to do. And let's talk about real quick the parties and steps to a transaction. There's going to be a home inspector. This person's going to check out the property, make sure and identify any conditions and any issues. A loan processor is somebody who helps process your mortgage application, that gather documents such as paycheck stubs, bank statements, verify employment. The loan underwriter is the person who works for the mortgage company that is basically assessing the risk of the overall loan, and they're the ones that are typically going to make the decision on a loan approval. The loan closer is the person at a mortgage company that prepares the final closing documents and typically sends them to the title company for you to sign them. Loan funding is when the mortgage company actually funds the loan, sends the money to the title company or the escrow company, and everybody gets their keys, and the seller gets their money, and the buyer gets to move into the overall house. And the other step is actually closing. This is the final step where the funding has happened, all the documents have been signed, and the buyer gets their keys, the seller sells the house and moves on, and all parties involved get paid. So the world of real estate mortgages has a bunch of nuanced terms, but the significance of home ownership or investment is very important. You'll empower yourself to navigate transactions confidently, making informed choices that align with your goals. Whether you're engaging with lenders, agents, or legal professionals, this comprehensive glossary equips you to speak the language of real estate with assurance. Thank you so much for listening to another episode of My Home, My Sale, Homeowners Corner. Bye-bye.